Greetings from the overflow room. My name is Glenn Tung. I'm a shareholder from New York. This is my 20th Berkshire annual meeting, and I'm delighted that we're able to once again be here in person. You two have brought tremendous joy to all of us through the years, and speaking personally, your wisdom has not only made me a better investor, but more importantly, a better, happier person. It's a privilege and honor to thank you. So Warren and Charlie, thank you.
Well, that's my kind of a question.
Yeah, that's fine.
Let's have more of those.
Yeah. Or you can say it again. I mean,
Maybe you could sing it.
Maybe I should quit at this point.
let him go to it.
My question relates to share repurchases. Since you started buying back Berkshire shares in size 2 years ago, the repurchases have ranged between $1 billion and $3 billion per month. By my estimate, it appears that the buyback rate is about $3 billion per month when Berkshire's trading at a 20% or so discount to intrinsic value, $2 billion per month at about a 10% discount, and $1 billion per month at a 0 to 10% value. Do I have that about right and approximately right? And do any other factors influence the rate of share repurchases?
Well, after you were so nice in your introduction, I have to say that, that you're actually wrong in our, if somebody had offered us $50 billion worth of stock at a certain point in the last 3 or 4, 5 months, we'd have taken it. You know, it's that simple. And as I mentioned earlier, we haven't bought any stock in April. It's something that when we can do it, and we know, at least we think the probabilities are very high. We certainly believe it in terms of our own evaluation and our own investment. If we think that we're improving things for the remaining shareholder, we'll buy it back. And if we don't buy it back. And if we have the choice of buying businesses that we like or buying back stock, controlling factors how much money we have, we'd rather buy businesses. And so it isn't, you know, we don't stay awake at night working out formulas or anything of the sort. But we don't ever do it if we think that we're not doing something at the time. If we had a lemonade stand and Charlie and I and you owned it, and the lemonade stand was making us about $1 a week or something, and we divided it up, and you said you wanted to get out. And if you said one number, we'd have the funds in our little lemonade company, and we'd buy you out. And if we didn't like the price, we wouldn't buy you out. And it's the same way we feel. But we do feel an obligation to do things that we think are intelligent and in no way risk, absolutely no way present any risk of financial problems under any circumstances we can envision, except maybe something like nuclear war. You know, we'll do it, but it never can be that big a factor. Certain companies, well, Charlie, I think spoke the other day in connection with Henry Singleton. I think he bought back 89% of the company over time, and he sold stock like crazy, or issued it much earlier when it was overpriced, and he bought it back underpriced. But the key to that, of course, is having people think you're wrong in doing it. So he was able to buy a ton of it. And there's some other companies that have bought a ton of it. And Berkshire isn't going to get the chance to do that because if people think we're buying, we've got sensible shareholders, is what it amounts to. If we had the same group of shareholders that own 2-day puts and they were our shareholders, we'd buy back the whole company, you know, in a very short period of time. But it's such an easy concept to assess. I mean, the second stock I bought bought City Service Preferred. That was the first one. Second stock I bought was a company called Texas Pacific Land Trust. And that came out of the bankruptcy of the Texas and Pacific Railroad back in the 1880s or something like that. And they had 3 million some acres, and they owned the minerals, and they owned the surface and everything else. But it was terrible land in the 1880s. But they had some kind of a charter that said that use the proceeds from land sales, whatever it was, they were going to buy in stock every year. And you know, I sat there when I was 13 or 14, and I figured if I lived to be 100, I would own the whole place. Well, I haven't lived to be 100 yet, and I wouldn't have bought the whole place. So both calculations are so far imperfect, but it's been a remarkable company. Just plain remarkable, because they would talk about grazing fees of $6,000 a year or something like that, you know, maybe when they had 3 million acres. And then they kept finding oil and more oil and more oil, and they've changed the form and all kinds of things, but they bought in stock week after week after week. And I sat there and figured out how long it would take until I owned the whole company. And I obviously made some improper calculations because it wouldn't have worked that way. But it still was apparent to me that it would be a very good idea if they had 3 million acres down there, that if they got all through with it and they kept their mineral rights and all kinds of things, which they were doing, you know, it ought to, at a very cheap price, it ought to work out well for anybody who sat around for a long time. And it has worked out extremely well for anybody who sat around a long time, but nobody knew that they were going to find a lot of oil, and that eventually El Paso would grow out far enough so that the surface lands became worth some money, that they were somewhat near El Paso. Then you had to go a couple of hundred more miles to find the next person, but that was another problem. So it's just so, some of the stuff is so simple, you know, but you know, people want to get their PhD or something, so they work out hundreds of pages and have lots of Greek letters in it and all that sort of thing. And you know, either you're buying out your partner at an attractive price, or you're not buying them out at an attractive price. And if you got the money around to do it and the price is attractive, you don't have some other opportunities, you know, why not do, I mean, you got to come out ahead by doing it. And if you've got other things that are more intelligent, you don't do it. And if it isn't intelligent on an absolute basis, you also don't do it. Charlie, have you got anything to add to that? What were you doing in 1943? You were in the service. And
Warren, we'd be crazy if we didn't rather enjoy having come a considerable distance from small beginnings. And to do that in good company, it's a favored life.
Yeah.
We've been very fortunate.
Yeah. And tomorrow, Monday, I can tell you it's almost certain that if anybody offers us, well, there'll be shares trade at Berkshire, and we won't buy any. But it's also a pretty fair chance someday a lot of shares, quite a few shares, not a lot. Berkshire's got our shareholders are too smart. That's one of our problems. If we want to repurchase shares. But we really don't want to squeeze it. We don't want to squeeze out anybody, but we also are here to do things that increase the value for the people who stick with us. I mean, it's not very complicated, and there'll be times when we'll do it, and there'll be times when we won't. But there won't be any formula, but there will be the principles that I've just expressed, and my guess is that my successor and their successor will have a similar calculation, because we're looking for people that are rational and devoted to Berkshire. So, Glenn, thanks for coming. And Becky, you're next.
This question was sent in by Dave Shane from Brooklyn, New York. He's responding to something he heard earlier today. He said, in the future, will Greg be able to act with the same spontaneity that you mentioned earlier and make immediate multi-billion-dollar decisions without board approval?
Well, my guess is that the board, it's just, they respond as people do. They'll put some more restrictions, or they'll have some more consultation on a lot of matters or some matters, than they do with me. I mean, they won't need to, but they'll feel that they haven't had the experience, they haven't seen them as long, and then a whole bunch of things, and they'll feel that the Delaware laws protects them better. And incidentally, they don't have directors and officers liability insurance. I mean, virtually every company on the New York Stock Exchange has it, and we just don't buy it. I mean, come on the board and you're a trustee for a whole bunch of people that trust you and me. I'm talking about the directors and me. Fine. But it's very interesting. People go on museum boards, and they're expected to contribute. People go on college boards, and they're expected to contribute money. And they say it's a great honor to be on a university board or museum board or whatever. It's a great honor, and therefore you should raise money for us. Well, frankly, I think our board's more interesting than being on a university board or a hospital board or something. I wouldn't know what they were talking about anyway, and on museum board or art board. So, but people have found that they can make $300,000 a year, which is way more, which is enormously important to some people and is meaningless to others. And I mean, the chances are, if somehow they'd arranged it so that directors didn't get paid at all, there'd be plenty of people who wanted to be directors. And it'd be a prestigious sort of thing and all that. But in effect, it's money that comes very easily. The whole idea of the independent director, frankly, it just doesn't really make any sense.
You don't think a director is independent who needs $300,000?
He needs the money.
A year?
Yeah, I mean,
he's independent the way a slave is independent.
I am going to read a few sentences which are absolutely the case. Except I'm doctoring. There's just I don't want anybody to be identified, obviously, with this. And these are word for word excerpts. I'm not telling you whether it's a woman or a man. I'm going to use a male pronoun because it's easier. But I picked out a few sentences from a letter I received many years ago. And this letter said, "I'm writing to you with a great deal of reluctance and a sense of personal embarrassment. I have tried all of the conventional means of raising the money." This person needed a couple $1 million. And I wouldn't have known the person if I saw him on the street, but it wrote this letter and said, "I need a couple $1 million. And then this is the item that I think you might find interesting. And I've kept the letter. "My income is composed 100% of my board fees." Well, I just looked him up, and at the time, he was a director of 5 prestigious companies, and had been directors of others, and he's going to be director of a whole bunch of things. But he was desperate for money, and he says he's getting 100% of it for board fees. And he was an independent director, classified as an independent director at every one of these companies. And it's just astounding to me that we're going to have a shareholders meeting in just a couple of minutes. We're going to start it, and it's just astounding to me that in 2006 we owned 9% of the Coca-Cola company. I mean, maybe they gave me a free Coke I mean, but we own 9% at Berkshire Hathaway. We obviously cared about the future of the Coca-Cola company, and just so happened in that year, CalPERS and a few others recommended that we be voted against for something or other, and at one time there were two big institutional investors that voted because they didn't think I was independent, because Dairy Queen bought some Coca-Cola, or actually the people that had our franchises bought some Coca-Cola. I mean, do they think I can't add things? And if we've got billions and billions and billions of dollars, that I'm going to be compromised? But it's just nutty. And so one year my vote fell from 96%, yeah, maybe it was 98% vote approval, to 84%, because I forget whether it's 2004, 2000, somewhere along the line, they just decided that I wasn't the right sort of person to be able to handle these responsibilities. And the idea that somebody, it's an important part of their income, I mean, what they want, they may want to do a lot of other good things. It doesn't mean they're terrible people. But if the difference is whether you, how you live, and in this case, whether the person would go broke, how in the world you can call somebody like that independent and say that anybody owns a lot of, maybe Walter Scott's, not independent, or maybe, it's just ridiculous. But it's the way the rules are, and we follow the rules. But
Well, they don't want them just independent now. They want one horse, one rabbit, one cow, one whatever.
I mean, I feel like Galileo.
Independence is not enough. You got to have a very diverse kind of independence.
Yeah, and if you desperately need the money, in this case, 100% of the income coming from it, you're on 5 of the most prestigious boards in the country, and classify as independent on each and other, and all you're hoping is that your CEO gets called by another CEO and says, "Is this guy okay?" And you say, "Of course he's okay," which means, of course, he doesn't cause trouble, and so he gets on a 6th board. Anyway,
I know. All I say is it's not our idea of an independent director.
No, it's all a little crazy, which brings us to the fact that we're now going to have our annual meeting here, and about 15 minutes we'll reconvene at 3:45, and then we'll do the business of the meeting that is required, and you're all welcome to stay, it's very. We're now come to the moment you've all been waiting for. We will have the annual meeting. Charlie doesn't join me for this because once or twice in the past he was caught on camera sleeping. So we've solved that one, and we're now going to have an annual meeting where I follow a script, and you may think that's impossible, but I'll do it. So the meeting will now come to order. I'm Warren Buffett, Chairman of the Board of Directors of the company. I welcome you to this 2022 annual meeting of shareholders. Mark Hamburg is Secretary of Berkshire Hathaway, and he will make a written record of the proceedings. Rebecca Amick has been appointed Inspector of Elections at this meeting, and she will certify the count of votes cast in the election for directors and the motions to be voted upon at this meeting. The named proxy holders for this meeting are Greg Abel and Mark Hamburg. Does the Secretary have a report of the number of Berkshire shares outstanding, entitled to vote, and represented at the meeting?
Yes, I do. as indicated in the proxy statement that accompanied the notice of this meeting that was sent to all shareholders of record on March 2nd, 2022, the record date for this meeting, there were 614,692 shares of Class A Berkshire Hathaway common stock outstanding, with each share entitled shares of Class A Berkshire Hathaway common stock outstanding, with each share entitled to one vote. 1,633,719 shares of Class B Berkshire Hathaway common stock outstanding, with each share entitled to 1/10,000th of one vote on motions considered at this meeting. Of that number, 423,719 Class A shares and 759,159,354 Class B shares are represented at this meeting by proxies returned through Thursday evening, April 28th.
Okay, and I will interrupt this meeting for 1 second to announce that we're still selling things next door, and we've sold 15 boats. So, with that brief commercial, and if anybody leaves, I will not be offended, or directly proceed with the meeting. The first order of business will be a reading of the minutes of the last meeting of shareholders. I recognize Ms. Sudecker, who will place a motion before the meeting.
I move that the reading of the minutes from the last meeting of shareholders be dispensed with and the minutes be approved.
Do I hear a second?
I second the motion.
The motion is carried. The next item of business is to elect directors. If a shareholder is present who did not send in a proxy or wishes to withdraw a proxy previously sent in, you may vote in person on the election of directors and other matters to be considered at this meeting. Please identify yourself to one of the meeting officials in the aisle so that you can receive a ballot. I recognize Ms. Sudecker to place a motion before the meeting with respect to election directors.
I move that Warren Buffett, Charles Munger, Gregory Abel, Howard Buffett, Susan Buffett, Stephen Burke, Kenneth Chenault, Christopher Davis, Susan Decker, David Gottesman, Charlotte Guyman, Ajit Jain, Ronald Olson, Wallace Weitz, and Meryl Whitner be elected as directors.
I second the motion.
It has been moved and seconded that the 15 individuals named in Ms. Decker's motion be elected as directors. The nominations are ready to be acted upon. If there are any shareholders voting in person, they should now mark their ballot on the motion. Ms. Amick, when you are ready, you may give your report.
My report is ready. The ballot of the proxy holders in response to proxies that were received through last Thursday evening cast not less than 449,190 votes for each nominee. That number exceeds a majority of the number of the total votes of all Class A and Class B shares outstanding. The certification required by Delaware law of the precise count of the votes will be given to the Secretary to place with the minutes of this meeting.
Thank you, Ms. Amick. The 15 nominees have been elected as directors. The next 4 items of business relate to 4 shareholder proposals that are each set forth in the proxy statement that can be accessed at berkshirehathaway.com. The first proposal requests that the company adopt a policy and amend the bylaws to require the chair of the board of directors to be an independent member of the board. The directors have recommended that the shareholders vote against the proposal. I will now recognize Peter Flaherty, a representative of National Legal and Policy Center, to present the proposal.